Hey everybody, how you doing? Thank you so much for joining us this afternoon. This is Greg Lewis, the Marketing Director for MetaStock, coming at you from my basement, aka the temporary MetaStock studio. We'll be starting our webinar in about 5 minutes and 43 seconds, as you can see by the counter. On the point of basement studios, I am pleased to announce that we have a current plan at the MetaStock office. This is to return to the offices at the beginning of July in a phased manner. That won't change too much, probably the look and feel of these webinars, but it'll hopefully help things like the previous webinar where we lost track of Jeff for a while. Those sort of things won't happen because we'll all be in the same studio, with the exception of our guest who will be coming in remotely, not unlike we do now. So in about 2 weeks, look for the format here to change a little bit as we go back to the regular and famous MetaStock Micro Studio. So today's guest is Ed Downs, and Ed will be talking about finding the most predictive and profitable chart patterns using his new and amazing system called Chart Pattern Engine. So we're really excited to tell you about that. While you're waiting, I'd like to bring up a few things. One, go ahead and say hello as you're coming in. I see people already coming in. Oh yeah, quite a few people already. I've already heard hello from Nellie David in the Philippines. Hello, Nellie. And please, as you're signing on, say hello, tell us where you're coming from, and we can say hi. And throughout the duration of the webinar, if you have any questions, go ahead and ask them here in chat. This webinar is being simulcast on both GoToWebinar and YouTube. If you'd prefer to watch it in GoToWebinar, you can go to our website right now, look for webinars and register, and then go to GoToWebinar. But the experience is essentially the same, and chats are being monitored in both GoToWebinar and YouTube. The recording, which many people ask about, will be here on YouTube only. So this is, if you're watching it now on YouTube, just come back later and it'll be here. So a few things to talk about. One, we have, just a moment please, we have another our monthly online trader summit is coming up on June 20th. That includes speakers such as Dave Aquino and Wendy Kirkland, Vince Vora, Barry Burns, our very own Jeff Gibby, Hema Reddy, Steve Primo, and the very popular Oscar Carboni. So that again is on June 20th. If you want to attend that, what you want to do is go to traders-summit.com and register. Hello FG from NZ, that's very easy to say. So go to traders-summit.com to register. And if you do so, you can be privy to some of the freebies that some of the presenters are providing as part of the presentation. Or if you prefer, you can just watch it, come here and watch it on YouTube on that day. Another thing I want to tell you about. The MetaStock 2020 Spring event has been extended through July. So this is a great opportunity if you don't yet have MetaStock, or if you'd like to upgrade to MetaStock 17 or buy MetaStock add-ons. Oh, sorry, just a second. This is a great opportunity for you to do so. All right. The URL to that, excuse me, I was slightly distracted for a second. The URL for that is metastock.com/ADMM420. That's metastock.com/ADMM420. And somebody's trying to get through to me on my phone. Apparently not. All right. Last thing I want to talk about is if you have MetaStock or want to get MetaStock soon, we have a great partner. He's the official MetaStock training partner. His name is Kevin Nelson, and he provides a great one-on-one and recorded training service. And right now you can get the premier, and if you go to metastock.com/learn MetaStock 3-for-1, that's long enough, you can get his premium service for 3 months for the price of one, which is a fantastic, fantastic service. So let's see how long we've got to go here. Oh, time's up. No, time's not up. We still have... Oh, that's weird. That was a residual, I guess, from my last timer. So we have about a minute left. I'm going to go ahead and check in with Jeff and Ed to make sure they're there. It looks like they're there. So give us just about 1 minute and we'll be right back. Thank you so much for your patience.
Hey everybody, I hope you're doing well. Jeff Gibby here. I'm going to be introducing Ed Downs in just a few minutes. But first, well, we're going to treat you to a legal disclaimer. Let's go. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. I'm really glad that I've got that memorized by saying it over 1,000 or 2,000 times. I do want to recognize Ed Downs today as our presenter. How you doing, Ed?
Hey, doing great, Jeffrey.
Is this your high school graduation photo right here?
It is.
All right.
Maybe a little later, but not much.
All right. Well, it's good to have you on here. I'm gonna do a little bit of an introduction to you.
Yeah.
Ed is somebody that does a lot of really good work with MetaStock. When I started, and you guys know I've been here for like, it only feels like 100 years, but as long as I've been here, when I started, we were working with Ed Downs. He had some really cool methodologies that he had built for MetaStock. We were also selling his product at the time that was called OmniTrader. And he's just a really, really smart guy. He's done 2 products for MetaStock. The first one was an AI product that's done extremely well. And then this one is the chart pattern engine, which is really, really cool, the one that he's going to be showing you today. I told him, I remember like about a year or so ago, we were talking about other things we could do. And I'm like, the stuff you've done with chart pattern, I'd love to see it in MetaStock. And Ed is like an optimist, and he's like, okay, let's go ahead and make that happen. And so he went in and did it. And he did a great job, as always. Ed, that's what I have to say about you. What did I miss?
Oh man, I really appreciate all that. Yeah, I'll tell you, MetaStock is so dear to my heart. Going back to I just said like my 30-second view or take on this is back to like 91, 92. Worked with Steve Akalis, the founder of MetaStock, to provide these utilities that automated the DOS version.
Mm-hmm.
And
before my time, I started on Windows, right? It was definitely Windows when I started.
Yeah, I think you came on right after Windows happened, like right after. Yeah, and I remember working with you back in those days. It was fun. We sold a lot of product, and people like these utilities. My whole thing is automation. That's what I have done as an engineer, automating chip design, and I just kind of carried that over to the trading realm, and have made all kinds of different automation products over the years. I'm especially proud of the AI engine that we provided for MetaStock, and these guys were great helping us get that done. It's kind of a complicated product hooking in, but they were super supportive, as they always are, and I just can't say enough good things about the staff over there. So we got that into MetaStock and said, hey, we're on a roll. So Jeffrey asked about the chart pattern engine, and because we had talked about that a couple of years ago, and said, yeah, I think we can adapt that, for MetaStock. So, one thing led to another. Here we are.
You did a great job with it, and I'm gonna just get out of the way. It's your turn.
Okay. Well, thank you, man. And again, it's so great to be here today with the MetaStock users. And I'm an educator first. Really, I enjoy doing that. I've taught many things throughout my life. Some sports things, believe it or not, but Anyway, and I just really enjoy helping people see something that I've learned about, and it just gives me a big charge. So today, I'm going to talk about our product, which is the chart pattern engine for MetaStock, but I really want to tell you as much as I can about what I know about chart patterns, because I've been studying them for a very, very long time, and have a lot there to share with you. Before I get into the presentation on finding the most predictive and profitable chart patterns, I just want to tell you that most of what I'm going to be talking about is in this ebook. It's free. Just go there and sign up and download it. It has lots of examples in it about the different patterns and how they work, and kind of where to set stops and stuff like that. So if you're interested in this, I'll bring it up again at the end, but just fulgent.ai/MetaStock is where it is. Now, my company is Nirvana Systems, so you may be wondering, what the heck is Fulgent? Well, Fulgent is the company that we created to really take our artificial intelligence out into the marketplace and provide it. And my theory was, if someone has MetaStock, it's an awesome piece of software. Why do they want to buy another platform, really? I mean, so the whole idea of this was to take this technology that we have, which is a component, and add it so that people who want the AI that we have can use it in the platform they love. And that's what we did. That's what Fulgent's all about. And of course, the second thing we did for MetaStock in Fulgent is this chart pattern engine. So that's you can go there and get that, and I think you'll like it. So I want to encourage you to do that. All right, so let's get down to business here. First, talk about what the heck is a pattern. Well, the really cool thing about chart patterns is that they absolutely reflect the psychology of the market. I mean, we recently saw a rounded top in the indexes a couple days ago. We were talking in here. We have a little broadcast we do talking about things that are happening in the market, and we noted that and said really likely to pull back in the next couple of days. And here we go, pulling back like crazy. Well, you could see that supply and demand changing in the market very easily by virtue of the movement in the chart. And so the psychology of the market, which became weak, was very evident a couple of days ago. Well, the really interesting thing about this is that when the pattern forms, it determines the behavior of the market as well, because people see it, they see the rounded top, they see going through support levels, and they get scared on the downside. Or, for the last 2 or 3 weeks, it's been to the upside, going through support levels, going through resistance levels. And of course, you can very easily see those in a chart, and so can everybody. It's just like they're right there. And so this is what determines how markets move, is looking at what's going on. Of course, we've been very news-driven recently, extremely news-driven. Of course, now they're saying after the market gets weak, oh, it's the virus, the virus. Well, okay. That's the news cycle. They don't know. Anyway, the chart tells all. The chart tells you what's going to happen if you just look at it and look for these indications of psychology. Are they perfect? No. Chart patterns can fail, but my experience is they're 70 to 80%. If you confirm them just a little bit with a little movement around the pattern to say, yep, the market sees that pattern, they really do, you can do really, really well. So that's our objective, is to use these patterns to do well in the market. There have been some studies that have been done about chart patterns. Do they work, as it were? Well, yeah. But these guys, McKinley and Lowe, back in 2000, actually took on a project for their dissertation to prove that chart patterns were not just a figment of someone's imagination. Because at that time, and I know I was in a finance class, and they were saying, technical analysis, come on, that's voodoo stuff. You don't want to use that. You got to use fundamentals and all this. Well, when the market goes in February drops like 30%, really, I mean, what happened to all those companies? Did they suddenly get, that hit that much? No, that was market psychology at play. And so these guys took on the task of studying these different patterns, head and shoulders, triangle consolidations, tops and bottoms and things. And what they found was that, this is like at the end of their dissertation, the results of our analysis showed that the various technical patterns occurred far more frequently than if they were truly random events. Chart patterns contain useful information about future share prices. And of course they do. I mean, you can just look at this picture of the index that I took right at the bottom of the coronavirus. I mean, it was just like right there at the bottom of that thing. And of course, we were watching that bottom right there at that long support level. Yep, and took some action there. So anyway, that was all good. But just in this chart, I just went through them by hand, marked a bunch of consolidations and trend line breaks, and people see these things. They do. And so when you're breaking through resistance right there on a really big bar and a gap, man, I mean, and then when you bottom out and you're coming back up with a V bottom with a lot of volume attached to it, and you break through that going down, holy cow, you're halfway down at least at that point. So patterns are very predictive, and this, as I say, is just a kind of showing them in the index chart just to sort of show how many there are. And this isn't even all of them. I just marked as much as I could in a few minutes, and there you go. Okay, so we're looking at patterns. Which patterns? What do you look for? So part of what I want to teach you today is what they are. And there are, in my opinion, 7 really important key patterns in the market. We're going to be talking about those today and looking at them.
Ed,
yeah.
I'm sorry to break in. It seems like somebody forgot to hit the start broadcast button on the GoToWebinar panel again.
Oh.
I'm going to go ahead and start it and let you take it from there. I'm sorry about that. I only do that when you're here.
Well, it's okay. It's okay. But do you think I should back up a little bit?
Yeah, I would.
All right.
The broadcast is now starting. All attendees are in listen-only mode.
Okay. Well, welcome, folks. Great to have you on today. Ed Downs, of course, with MetaStock. Really, this is always enjoy doing these events because these people are so awesome at MetaStock. And you know that because you have their product. But we got a little bit of a late start due to a technical difficulty. I'm going to kind of go a little quickly through my initial slides. But let me just say, if you didn't know, I've had a relationship with MetaStock since 1992, creating automation utilities for the DOS version way back then. And Jeffrey was right there on the staff shortly after that. We got to know each other. And so we've had this great relationship all these years. And recently created a couple of products for the platform, an AI product, and also this chart pattern engine. So what I want to do today, I love teaching things. I've taught things all my life, and it just gives me a charge to help someone out with the knowledge that I've accumulated. And so we're going to be looking at these patterns, and I want to help you see what they are and how to trade them, in addition, of course, to showing you the product that we built for MetaStock, which is the chart pattern engine. So let's just dive right in here. And the first thing I want to say is I'm going to be covering a lot of patterns, a lot of material. If you go to our Fulgent website, to the MetaStock, fulgent.ai/MetaStock, and just sign up there. There's a free download. You'll get the email right away for it. And it has a lot of examples of these patterns I'm going to be talking about, the psychology of them and all that. So I encourage you to do that. Okay, so there we go. And I'll show this again at the end in case you didn't get it at the first time. All right, so the first thing is, what's a pattern? When we say chart patterns, what are we talking about? Well, the really cool thing about these patterns, and I know you know probably most of them, like consolidations and trend lines and support resistance and all this, is that they reflect the psychology of the market. We recently had what we would call a rounded top occur in the intraday chart on the Dow. A couple of days ago, we were saying, okay, that's probably going to drop in the next couple of days. Start getting ready to exit longs because the market's going, rolling over like this. And so that's reflecting what people are thinking. As you see that pattern form, it reflects their psychology, and they're so predictive. But the other thing about them is that they determine behavior. They actually, when that happens, people see it. If you're breaking support, they see that. The market's very sensitive to this stuff now, and the selling just piles in, if you break a support level. So they do both things. That's what's so cool about them. This is an emotional market. It's been a very news-driven market recently, but still, it's all emotions, man. I mean, that's all the, that's happening with any of this stuff around the market because people don't want to lose and they want to win. Greed and fear, or fear and greed in that case. Okay, so one of the questions people ask is, well, are chart patterns predictive? I mean, do they really work, quote? And there's been a lot of debate about that. When I was in graduate school in a finance class, the guy said, oh, don't look at that technical stuff. That's just voodoo. And forget it. So, fundamentals, that's what's key. But I'll tell you what, when the market was dropping in late February and going lower, and all these stocks like Brinker going from like 35 to 7, what are those fundamentals? Does the company really lose that much value in that short time? No, the market was selling out of fear. And so we know they work, but this study by these two gentlemen back in 2000 was really a landmark thing that happened because they looked at these patterns, and here it says, looked at head and shoulders, triangle tops and bottoms, and other consolidation patterns. And in this study, which was their dissertation, they determined that, with the data that they collected from all these patterns that they found in the charts, that the patterns occurred far more frequently than if they were just random. So, they contained useful information about future share prices. And, you can just, you can look at a chart. This is a chart of the index that I took right at the bottom of the coronavirus. And we had good time after that, in the charts. Of course, the virus is kind of not so good with people with work and all that. But as far as trading goes, it was kind of a heyday because there were lots of patterns that showed up after this. But I just marked a bunch in the chart: consolidations, trend line breaks, another trend line break here, trend line break, consolidation, and volume patterns galore down here that indicated a reversal right there and a reversal right here, another one here. So they're everywhere, and they're very, very indicative of the next move that the market's going to make, especially as they follow through. So just the existence of the pattern is the first thing you want to have. Then you want to see follow through. You want to see the market goes, we see that support level being broken. Oh dear, time to sell, and so you're looking for that follow through. But what you want to first do is find the patterns. So what patterns are we talking about? Well, there's 7 that I have found over 20 years of doing this, 25 years actually, since I wrote this little piece I'm going to show you, that these 7 are really the key ones. There's lots of other derivatives, but these are them. What are they? The 7 primary patterns are trend lines, breaks and reversals, support, resistance, breaks and reversals, consolidations, volume, climax, and trend, which is the same pattern, Fibonacci retracements, price gaps, and saucers. Now, the ones after that, the secondary patterns, are derivatives of the other ones. Tops and bottoms are really support, resistance. Cup and handle is really a saucer followed by a consolidation, and head and shoulders is really a trend line with a lower high. So they're, they are, those 7 are really all you need to know, and you can trade very, very well with them. I did write that book back in 1998, and just a little book on chart patterns that's available, I think, on Amazon. But if you get that free ebook, it's got exactly the same information. Not that I'm trying to stop Amazon from selling books, but no need to go get the book. You're going to get it in that free ebook. Okay, and I'll show the link again later. Okay, so let's get down to business here and talk about these patterns and how they work out. Okay, the first one is trend line breaks and reversals. So we've all seen these, these invisible lines that form in charts across lows and across highs. And when you break a trend line very solidly, market's going to move, most likely. The same token, if you come back to a trend line and reverse off of it, that's also a really good sign the market is going to move. So we're looking for action around these sloped support and resistance lines in the charts. And like I said here, strong breaks of any very highly visible trend line usually, or very, very often, result in significant moves. I'd say if it's really well-formed trend line, you're going to get a move. It may be 4 or 5 days, and that's all it goes, but it is going to move like 70, 75% of the time. Okay, so now normally in my presentations, I would start showing you all kinds of examples. I'd come in here and say, oh, let's look at this chart, slides, right? Well, I got something better than that, because we've actually got this thing coded in MetaStock. So let me bring up MetaStock here. And MetaStock 17, awesome piece of software. And just the option capability they added is worth the program. If you don't have it, I could sell MetaStock really easy right here, but we'll talk about patterns today. But it's awesome. Okay, so brought MetaStock up, and what I want to do is let the tool that we built bring up these patterns for me. Okay, so let me go ahead and do a couple things here. I'm going to first say view commentary, because I want the commentary up. And there it is. It's actually still there from the last time I ran it. And what we're going to do is go into the interface for our software and turn on those first 2 patterns we talked about. So we actually, my programmers working with the amazing staff over at MetaStock, were able to hook this right into the menu. So Fulgent AI, by the way, I didn't explain Fulgent to you. Fulgent is a company we created to take our artificial intelligence out to people in their platforms. So, and the reason was, I have to do this little small digression. The reason was that I know MetaStock is awesome software, and if you're using it, you want to just use it. You don't want to go buy some other platform. So the idea of this is we have our artificial intelligence is like a little package that bolts on to the program. It's a pretty big piece of software, but it bolts on, and that way you can just use it right inside MetaStock. So that's why we did that, and it is awesome. Okay, let me show you some awesomeness here. So Fulgent AI, here's our interface to Fulgent AI. This thing on the bottom is the other AI program that we're selling, FT Stocks. We're not going to talk about that today. We're going to look at the chart pattern engine. So that's FT patterns for Fulgent Technology patterns. So I'm going to bring that up, and you see all these patterns listed here. We're going to be talking about what goes on out here in a little bit, but right now I'm just going to turn on trendline breaks and trendline reversals. You notice that each of those has a number, 501, 502, and that has a purpose that we'll talk about later when we look at the scanner. Okay, so that's why they're numbered. But let's just turn them on and say close, and then let us do a little refresh here. Voila. Okay, now what it's showing you, and let me zoom in a little bit here so you can see it better, is this is the trend line breaks that the program has found on Apple. And it's really pretty cool. Again, it took a while to create this, but it was well worth it, because what it does is it shows you the range of bars that created the pattern. Now, I think in a coming version of MetaStock, we'll be able to actually draw the lines from our application. But William Golson over there and Jeffrey told us how to color these bars, and so we do that for the chart pattern distance. So if I go over here and I say, well, let's get a let's see, I want a trend line. Yeah, this will be good. Oh, that's a big pen. Okay, so right across there. So when that trend line is broken, these things are firing. All right, and the same going up here like this. Oops, I gotta get it again. All right, there we go. Yep. So a little bit early, but still it really followed through. And this one says, so it says TLB for trend line break is the legend. This says TLR for trend line reversal. The trend line goes way back here, and so I could draw across there, but it hits the trend line and bounces off it to go up. And then here's another very nice trend line break that we'll see over here, right across there, that resulted in an awesome move. Okay, like I say, once the thing starts moving, people perceive that. Now, this is also obviously a consolidation over those bars. We see that, we know that, but I've only turned on the one pattern, so I'm not gonna show it yet. And then we had another one over here, okay, firing. And then it's saying, I'm seeing trend line breaks to the downside. It was a little early, it occurred up here, but those three were just a little bit early on downside breaks. The main thing I want to say is we bring up these patterns and I show them to you. What this software is designed to do is to find the pattern. You know, we've tried adding things around the pattern, like only traded if this is going on or that's going on. The problem with doing that is it blocks a lot of them, and sometimes it blocks good ones. So we're bringing the pattern to you, showing you where the pattern is, and then you can just go through the charts that have the patterns and easily tell which ones are following through. It's easy peasy. But if you don't know where they are, you can't do that. So when you use the scanner, you can find the 50 or 60 stocks that have a trend line break today and go look at them and go, whoa, there's a no-brainer right there. So that's what it does. Okay. All right. But still, look at that. It's like 70% accurate in this chart. Really, really proud of all those signals that it generated. So that is the trend line break reversal. And we had one reversal go back a little bit more. Here's another trend line break here, another one here, and one here. And they're all good. They all took off after the break. So yes, patterns can be found automatically. But again, if you don't, if you're just looking at charts yourself, you want to look for these pivots going like this, and then you draw a line across them, look for a break, and make sure it's moving away from that line before you enter the trade. And you can set the stop right at the line or just a little below it. Okay, so if I were taking this trade, I can set the stop just below the line. Once I get up into here, should be good to go. Market sees it, market's moving, yay. Okay, let's go ahead and go to our next pattern here and just check into time. We're good, we are good on time. All right, so trend line breaks and reversals, very, very important pattern. Let's look at door number 2. Support and resistance breaks and reversals, same thing as trend lines, except they're flat, they're horizontal. But these guys are really powerful because the market loves to look at support resistance, loves it all day long. They want to see, oh, that support level is being held, oh, not so much, oh dear, sell. Or resistance, break. And I could show you, the real intraday charts of the Dow, and you can see these very clear resistance levels being built the last 3 weeks, broken, off to the races, broken, off to the races. And then today, of course, we had a rounded top pattern, which we're going to look at in a minute, and that's a good anymore. So they're just really powerful. And again, you want to see, does the market see it? Because we can find them all day long, but does the market see the thing? That's what's really important, and that requires you looking at it to determine that. But that's okay. All right, so now let's go ahead and go in here back to our Fulgent AI tool, and I'm going to turn off the trend line break and reversal, and turn on the support resistance breaks and reversals. I love this pattern. It's so cool. Okay. Refresh the chart and bada bing, there we go. Okay. So support resistance, let me zoom in a little bit here. I probably should get rid of these guys because they're giving up the project right now. All right. Go in a little bit, and you can see, so this is looking for levels of support and resistance. So if I come over here and grab the horizontal tool, that little break right there is that support level. And I see it follow through. I see it go back to the line and start going down again. That is a bellwether indication that that thing is going down. Here's another one breaking through. Where's the level? Let's look to the left. Find my thing again here. There you go. It's right there. That one follows. And that goes down some, and then it reverts. We have another pattern down here, which is called a volume climax. You're going to learn about that in a minute. If I saw that volume climax, I either wouldn't trade it or I'd wait, because it says the volume is really rising. As that goes down, it's going to peter out. These are just things you learn about these as you go, but it did break that support level. So that's what we're trying to find. This one over here was also awesome, breaking that resistance level right there, and so on. So let's see, let's go ahead and go back to the chart a little bit. We find some more back here. All right, these are reversals. So support resistance, it sees that resistance going back to this pivot right here, and it's reversing off of it. You see how great that was? So again, if you don't know it's there, you can't trade it. This is designed to find them for you and show them to you. So that is the support reversal, support break and reversal in just Apple. Now, I'm really tempted to go to the right here with a little next chart thing and show you a bunch of examples. We'll do that a little bit when I've gone through all the patterns. It would just take too long. So we're just going to do Apple. And just one symbol is not, some of the patterns will be great, some won't be so great. Most of them, about 60–70%, will be very predictive on their own. And if you confirm them with, like I say, a little market follow through, then you're golden. But we're going to stay on Apple because everybody, it's got a lot of sponsorship out there. I'm sure you've traded it or probably have. So it'll be a good one to stay on. All right, let me go ahead and get this little line there if I can get it. Yep, there it is. All right, back to the right. And let's go on to number 3. Number 3 in our lineup of amazing patterns is saucers. This is so cool. You are going to love what this does. If you've never seen this in charts before, I'm telling you, it's going to knock your socks off. This one pattern is probably worth getting the whole, whatever, the software. At least you need to be looking for this, because when it happens, it is awesome. All right. So it's a rounded formation where price is slowly changing direction, and they can be very short term, like over 5 bars, like this. We had one that lasted, like I said, it was intraday, yesterday, a couple days ago, that was very clear in the index chart. So these two saucers in this picture are buy signals because they're to the upside. You can also have them go to the downside, and they're equally predictive. They're extremely reliable. So let me see if I can back that up with some chart examples here. Let's go back to our Apple job and look at going back into Fulgent AI, and we're going to turn off support resistance. And the only reason I'm turning them off is I don't want to gum up the chart with a bunch of patterns. We're focusing on one. So let's get down to saucers here and turn it on, close, and refresh. All right, give me some saucer magic. All right. I mean, just look at this. Dadgum. These look at how well these are finding these turns. I mean, they're not perfect. There's one that didn't work out, but again, saucers are good at bottoms and tops. This one was found after the market had moved quite a bit. So we go, yeah, you found a saucer, but so what? That one isn't going to work out. But anything that's at an extreme point typically will. I mean, pretty much every signal in this chart is profitable. What could you do with that? How much money could you make? I don't know. It's a lot. So there's the turn there. It finds a longer term saucer. Now, one thing I want to show you as we go along here is some more things about what the software can do, because we have purposely set each of these signals to last 3 bars. 3 bars. Why 3? So you can click in it. So I can click right here, and it tells me that is a medium term saucer. It shows the picture in the commentary, talks about it, why it's good. And then there's a link to the website down here to go read more about it. So it's very simple. Not a lot of subjective stuff in here. It's just, yep, you got a saucer right where you clicked. And of course, anywhere I click in here, it's going to do the same thing. So that's so you can bring up the commentary for any signal you see in the chart. Okay, so we've talked about that now. So again, awesome pattern. Love this thing. It's really, really profitable. Okay, let's move on now and talk about number 4, I think? Yeah, something like that. Oh, another good one. Fibonacci retracements. Now, 38%, 50%, and 62% retracement of moves in charts, right? So you got this move right here. You come down 50% of the way, and you all know that's a really good turning point for charts. Now, why does it do that? I don't think anybody knows why. Doesn't matter. It happens. You see it all the time. It's very predictive. If the chart starts moving in that direction, 50%, oh, there you go. That's it. Okay. And MetaStock has some really great tools to see this too. So let's go ahead and go over to MetaStock and look at this again. So back to Fulgent. And by the way, Jeffrey, I'm going to lobby for a hotkey for Fulgent if I can get that at some point. Anyway, okay. So let's see. We're looking at Fibonacci retracements, pattern number 506. And let's go ahead and bring it up here. And refresh. All right, hot diggity dog. What do we got here? Okay, so what is that right there? Anybody tell me? What percent retracement is that? You got it, 50%. How can we tell that in MetaStock? Well, we go over here to the R tool and we stretch it across that move right there. And actually, no, yeah, it was the bar was right at 50. There's the 62. So it actually got almost a 62, but right in that zone right there is the turning point. And if I go to the left over here, look at some other ones. What do we got? Here's a nice 50%er. How do we get that? Well, let's get the R on here again and look at it. Yep. No, I'm wrong. My eyes must be as you age, kind of happens, but it's okay. But so it looks like we're like a 62% retracement to the down move. But look how predictive those are. And these are, you would see these on the right edge of the chart on that day. There's no hindsight in this. It's actually finding them and putting them up there. But we found there's like 3 on this chart. They're all good. There's one on the right, on the very right, that was, it's a good Fibonacci level. Let me go back over here. But the market was getting kind of crazy right there. We did have about a 2-day pullback from there, but then it continued on. So, there was participation. And again, they're not perfect, but they're very, very good, as you can tell from the other examples that I've pointed out. So pretty simple. We find those 3, 38, 62, 50, but you're just looking for a range, halfway down of a very clear range. And again, it has to be obvious to the market. It can't be some mushy thing. It's got to be really obvious. So, and that one is, because it went straight up, straight down, and turned one bar right there at that level. Got it. It's good for a very nice move. Okay. Let's move on to the next one, which is what? Gaps. Oh, yeah. I love price gaps too. What causes a gap? Well, overnight, in the overnight trading, people are trading that stock. It's that plus the pressure at the open. If there are a ton of buy orders sitting at the broker for the open, like market on open orders, what happens is when the market opens, the market maker, they got all of these pile of buy orders and a little bitty bit of sell orders. Well, that's at the price you're at. So they've got to increase the price until enough sellers come in to make that equal. When it's equal, that's where they start the market day. So gaps are big deals. They indicate a sudden change in supply or demand. And there are basically 3 kinds: a breakaway gap, a measured gap, and an exhaustion gap. And breakaway gaps occur at the beginning of moves. Measured gaps, the reason they're called measured gaps is they actually measure the midpoint of a move. Okay, and then you have exhaustion gaps where the market has been moving a long ways. It gaps, but it's out of gas. That's it. It turns around the other way. The thing about these is the breakaway gaps are easy to see because they're breaking away from a low or a high, right? Measured gap, however, you've got to wait a few bars. We talked about this. Make sure you got participation. You got to wait because a measured gap can turn into an exhaustion gap, right? This chart could turn right around right there and go down. And a lot of that is volume. If you get a lot of volume coming in right after the gap, it's probably an exhaustion. But you just wait a little bit and just see, does it continue up? If it's a measured gap, you got all this distance to go in the chart. So don't get greedy. You know, you can get it up here somewhere and you're fine. If it turns around and goes through the gap, that's probably an exhaustion gap. So these are the three that we look for. Let's go back to MetaStock and see what we got. So tools, Fulgent, chart patterns, and we'll turn off the fibs and turn on the gaps. I just love this pattern. Okay, here we go. All right, let's see what we got. Come on, lay it on me. What do you got? Ooh, we got a lot of them. Okay, so we widened the constraints on the gaps because they're so good at predicting movement. So that's why you're seeing more of them. And by the way, you're able to actually see more patterns than what I'm showing you by opening up the filters in Fulgent. We're going to do that in a little while. Let's just get through the material first, then I'll show you that. But these are the significant gaps. You know, gap down. What is that gap right there? Anybody in the audience? A measured gap, exactly. It's a measured gap because we can see it occurred at exactly almost halfway of that move. Okay, breakaway gap, breakaway, breakaway, breakaway. What is this one right here? Look at all that volume down there. What do you think? It's an exhaustion gap because of all the volume coming in. And sure enough, chart turns around, breakaway or measured gap here, halfway, right? Halfway from there to there. So how do you use that? Well, you see it happen, you see the thing moving, you go, well, gosh, we should get up to here somewhere. And you can easily measure it in MetaStock. Just take the same tool, stretch it across there, put the center of the tool in the gap, which is going to be right there, and it tells you it's going to there. Folks, this is extremely reliable, extremely reliable. And you can put your stop like right there at the bottom of the gap, you know, so okay, if it doesn't keep going, if it turns into exhaustion, you get out. But if it keeps going, it's going to probably go twice the distance from where it came. It's just what they do. So I hope you're taking some notes and remembering this stuff because it is going to help you make money in the market. I'm telling you. And you can see all these gaps. You know, this was a breakaway gap that did not continue. It gapped, but it didn't keep going down. It went sideways. Here's a breakaway gap that kept going up. Oh, yeah, we're going. And there it goes. Here's another measured gap. And there you go, another breakaway gap. It's a little early, but it's okay. And here's a gap at the bottom going up. Great pattern. Awesome pattern. Works like gangbusters. Okay, let's go here and look at the next one. Which, let me see. Can't remember. Oh, yeah. This is another really great one. Volume, climax, and trend. I love this pattern because the psychology of it is so cool and so predictive. What basically happens is you're falling, right? The stock's going down, 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 or the market. And finally, after it goes, you get a whole lot of volume comes in. And it usually stair steps just like this. Boom, 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 boom. And then, oh, starts going down the backside. If the price chart turns around right there, what's happened is everybody who wanted to transact, you know, you got the sellers, they're going crazy. Get out, get out. They're going for the exits. The value buyers are going buy, buy, buy. After a little while, they're both, okay, I'm done. Those who want to sell have sold. Those who want to buy have bought. That's why you get all the volume. And it takes no pressure to move that chart, none at all. It just goes up because it takes nothing, just a little bit of buying, and there it goes. And then people see it and they go, oh, that was the bottom, and they start buying it. So anyway, it's a self-fulfilling prophecy, just like all these patterns. Now, if you're going down and it does not go up, if it continues down, that's what we call a volume trend, And there are also very good patterns. That is a measured move pattern, which means when you see a volume trend occur, it is very likely the halfway point of the move. Mark that down somewhere. You see this big volume go up like this, back off in a move, and the chart keeps going. Put that point in the chart, go back to the low ahead of it, or the high in this case. That's halfway, 70% of the time. Easy. So there you go. All right, let's go to MetaStock. Check it out. Tools, Fulgent, and back to little patterns here. Okay, gaps. Where's our volume? There it is. 512, volume climax. All right, and I'll refresh the chart so I can talk to our little engine out there and say, give me the volume climaxes. All right, so let's see. Let's go back a little bit more here. I think, yeah, there was some. Now, the other thing that happens with this is if you've got a market that is moving up and down, it's very susceptible to this pattern. Look at this one right here. I'm going to zoom in, because this is just picture perfect, classic volume climax. Boom, volume up, 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 up. Volume starts to back off. Chart turns around. That's it, right there. Same thing here. Not quite so, much on the volume on this one. And now here's one that it didn't pick up that you can see with your eye. Well, it was a little early. That's why. This volume peak right here occurred right before the price turned up. And then you've got volume on the measured gap, boom, propelling it. So these patterns tend to work together. They're simpatico with each other. That you'll see them occurring at the same time. So that was another really good example. So this is a very favorite pattern of mine. When you see the really, really well-formed ones, like let's go over here and go to the right and look at this. Look at that. This chart is screaming down. Volume is, oh my God, the most volume in the entire year or more. And then the volume backs off. It's going up. There you go. Right there. That's it. That's when you should be buying this thing, like end of March. No brainer, pretty much. So that's what they do. Okay. All right, let's go ahead and go back over now and look at, we've only got, I think, maybe one more to cover, I think. I think that's right. Let me look here. Yep, one more. And then we'll talk about some other things that are going on. So consolidations are one of my favorite patterns. They really are amazing, especially if they're extremely well formed. They need to be very obvious, okay? A range that is obvious, that breaks two in the same direction, is another continuation move pattern. In that, if you come up and you consolidate, doesn't matter what shape it is, it could be a flag, a pennant, a rectangle, doesn't matter. This is buyer, buyer, seller, buyer, seller, buyer, seller, buyer, and then breaks out. The buyer's won. What that will do is mark the halfway point of the move. So that's why it says down here, AB equals BC, and BD equals DC, and the same here, CH equals EF. So CE, there's the E's missing. I need to fix that. But anyway, this from here to here and down, that's halfway point. You see it over and over and over again. Again, the market has to see it and has to move in the direction of the trade. And you've got a lot of time to make money off this. It's going to go a long ways if it's right, if it works. You can have consolidation failures. They happen fairly often where consolidation happens, but the chart goes the other direction. That's also very tradable, not nearly as predictive as as a break in the direction of the pattern, but it's still very predictive. So you have that too. Let's go ahead and go sort of final one to look at MetaStock before we do the big bang. All right, get ready, get the drum rolls going. It's coming. Okay. Consolidations. Let's see, right there. Okay, turn on the volume climax, turn on the consolidations. Oh, they're still on there. Okay. And let's go ahead and close it and refresh. All right. And let me back up a little bit here. Okay. So, and again, what we're finding is ranges. Okay. Ranges that could be consolidations. If you can't find it, you can't trade it. And look at how awesome these are. Here was an expanding pattern. Expanding patterns are great top formation patterns. They're truly awesome. This consolidation CNS pattern fired, boom, straight down. Here we go. Up, consolidates, up easily, twice that distance, a little more to there. This one was a false breakout. I don't know, there's some news or something came into the market right there, but check this one out right here. Consolidate sideways, boom. Consolidate sideways, these rectangle, another rectangle, and then here's another nice broadening. That's actually a diamond consolidation right there. It got faked out early. It fired along right there because it sees this range. Again, this is happening in real time. It doesn't know the future. So there it goes. But it didn't go, right? So you already moved all this way and you get this, you think it's going to go up to here somewhere. I don't think so. I mean, so you gotta use a little common sense, but it's finding the pattern and then it says, oh yeah, big gap right there. We've got volume coming in. We're going down. And so there it is. Okay. All right. So that is actually the last pattern I wanted to show you. And you're probably wondering, well, what if you just turn them all on? What does it look like? Before I show you that, I want to show you something else because what we're going to do right now is get a little bit into the tool, show you a couple things. Trying to think of one that is really amazing. Let's go back to gaps. Okay, back to gaps. And you'll notice over here that we have the center column. It says short-term, medium-term, long-term. What we actually do is find patterns in all three terms. Short-term being 16 bars or less, medium-term 32 bars or less, long-term 64 bars or less. So the reason that's important is if you're trading like to make a 1 or 2 day move, you want to be trading the short-term patterns. And you notice most of them are off, okay? And that's because if they were on, there would be patterns freaking everywhere. So we don't have them on by default. Here's the medium term. And a few of these, the longer term patterns fire infrequently enough that we made that the default. So in here, if you click, set defaults, it'll bring them back to this, but you can do anything you want out here. I'm going to turn on the gaps, short and medium, and close this, close it again, and refresh it. And you can see there's quite a few more gaps being shown. So little bitty short-term gaps, it is going to find. All right, so now we're going to do the big bang. Are you ready? Okay. Jeffrey, you're going to like this. Jeffrey hadn't seen this yet, by the way. We're actually released it over to MetaStock today, so they're doing the QA and we'll get it out in a couple of days. Let me go and set those back to just the long term. And I'm going to first turn on all the patterns, enable all. Just that one button right there turns them all on. All right, you ready? Yep. Okay, cover your eyes. Whoa. Okay, there they all are. Now, back up a little bit. And they're the ones we've been looking at. They're all great, but it'll just find it'll color code the bars that defined the pattern that led up to it, and they're all there. All the ones we've looked at. Now, here's actually the big bang. Are you ready? Excuse me. So I'm going to now turn on all of the short term. And we'll say okay on that. This is enough to illustrate my point. It's finding patterns everywhere. Okay, every little pattern that could be a trend line break, could be a reversal, could be a consolidation, could be a gap up or down, it is finding them. Okay. Now, why is this so helpful? Well, again, if you're trading very, very short term, you kind of want to be alerted if you're possibly breaking a consolidation. Again, a very, very tiny one there. So it'll find every single one to show you in the chart. And where, it kind of depends on your personality. If you just want the best patterns possible, you're going to use fewer, maybe other time frames. But if you want to see as many candidates as possible in the market, you're going to want to kind of look at probably a lot more of them. But we have another thing in the product, and this is where the AI comes in, where we have built a pattern database that actually looks at these patterns and is trying to figure out which ones are likely to work out, seriously, based on prior pattern examinations. This is where our artificial intelligence comes in, and it's really easy to activate it. I'll show you that. So the first thing I want to get across is you can turn on all the time frames, and I just turned on the short term. I could also do all the medium, all the long, but that's that. Now, if I go into here and say, okay, only show me the ones that you think are really good. That's what this down here is for. So I can go to, let's say, a 70 level score on the patterns. And what this does, it just makes them more accurate. It will weed out the ones that it goes, that one right there, I don't have any database entries that look like that one, so I'm not going to show it. And look at this. They're all like all the way up long. I mean, down. It's awesome. And I can go further. Let me go here. Again, this is the power of AI on this. Go further. Oops, no. Down here. Let's see. Let's look at the 80s. All right. Yeah. Pretty cool, huh, Jeff? Okay. So that cut out even more of them. So now it's really trying to find the ones that are just taking off like crazy, like that support resistance break right there. It's awesome. So it's up to you. If you just want, to see only the really, really great ones, you would turn them all on and use that thing to set the score. Or if you just want to see all the patterns that we've got, then don't do that. Go through them yourself and look at them. And look at, is the market participating? That's where you're going to do really, really well. Okay. So that last thing I want to talk about here before we take questions, I have a couple of quick tips for you. Actually, I'll show this at the end. Let me go through my tips first, because a couple things I just want to impart with you on trading patterns. I believe these four are the ones that are really dynamite. You've heard me mention this, like the saucers, we saw how awesome they were, rounded tops, support, resistance breaks, dynamite, especially if they take off and there's volume behind them. Volume climaxes, incredible pattern. We looked at that, and consolidations. The other ones, the trend line breaks and stuff, are also very, very good. But these are the ones I would tend to specialize in if you're looking for just the best ones. Okay, so that's that. The next trading tip I have for you is if you're trading, try to trade the less volatile charts, because if you trade something that's really volatile, you're going to get stopped out real easy. You know, I mean, if I was trading, let's say this support break here, I might put my stop, I don't know, right there, get stopped out right away. So, you know, less volatile charts just work so much better. If you can find this, try to trade the less volatile. In terms of the day-to-day movement, now they can move a lot on the swings. You do want that, just not the really intense up and down stuff. Okay, so that is that. And I think this is this last one. Yes. So the other thing is use the market. Look at market charts with the tool or just your eyeball. Look at it and look for support resistance breaks, look for consolidation continuations. These are the things that will bias your trades in the right direction. The market is really the thing that drags everything with it. So you want to make sure you're in the direction of the market. So if you've broken support and you're going down like today, you know, you want to look for down patterns. Okay, so that's very, very important. The last thing I want to say is you can easily use these patterns to confirm any system you have from MetaStock. And there's some great ones out there. Early on, Jeffrey gave me access to some of them. I don't want to mention names because they're just all good. So I don't want to bias anything, but they're really great. And you can just look at where the signals are firing in those other systems and turn on all the patterns and look for patterns that confirm the signal. So like right here, this is an RSI 14. You buy when you cross, go down through the 30 line and back up through it. So look at that. The volume climax right there on that same day. Here I had a trend line break right there on the same day. Another what is that? A Fibonacci retracement right there on that same day. If you've got the pattern, we didn't have one over here really on that day. I mean, one came a few bars later, but or here, it's just not there. There isn't one right at that bar. So if there isn't one, or here either. So if there isn't one, then you know to avoid it. So for confirmation, it's really, really awesome. Okay, so this gets to my last thing I want to show you, which is sort of the summary of the tool that we've been looking at, and that is the scanner. So we've already talked about the advisor, the annotations in the chart, and you have all this configurability. But what I want to do is show you the scanner because it is just too cool. Let me go back in here, and I'll tell you why I say that. Let me go back to show all. We're going to show all the patterns. Okay, and refresh. All right, we got a whole pile of them now. They're everywhere. And let's run the scanner. So go to the Explorer symbol. I'm going to find the Fulgent AI patterns down here somewhere. Oh, lots of great stuff in here. There it is. It's already on. And I'm going to scan the S&P 500. Okay. Now, normally I wouldn't try this at home, except that it is so fast. Watch this. I mean, this code, it's all really highly optimized. It is literally looking for every one of those patterns, short term, medium term, all whatever, 11, 12 of them in all those time frames across 500 symbols, and it's almost halfway done. So you could scan the whole market if you want to. I mean, what you could do is set that strength rating up to like an 80 or 85 and scan the whole market. I bet you'd find on any given day 5 or 10 just dynamite picks of patterns that are really well formed and are really taken off. And there you go. That's what it's for. So we'll let this finish and just kind of look at the expiration. And I bet you what we're going to see today is not many long signals. And probably a lot of short signals for today. Okay, let's see. So we've got the longs, the shorts. Let me click on the longs here. Yep, no longs. Okay, let's go on the shorts. Oh yeah, baby, we got lots of those. And the reason we have the numbers in front of the patterns is so you know what they are, because we have all of them in here. There's a 509, a 504, a 501, 508. So you just have a little legend, and oh, that's a consolidation or whatever it is. And of course, you can double click it and get the chart. This is the column that's really interesting, is the in long and in short. because if I click that, what I'm going to see, remember I told you that we track trades for 3 days. So you will see things that have been in trade for a day or two, and they could be really good patterns. Now, so far, not happening there. Let's look at the in shorts. Normally, I would see like 2s and 3s. Oh, I'm sorry. Come on, Ed, wake up. Bars. Okay, so in long, here's all the in longs, and this is 1 bar, 3 bars, 3 bars, 3, 3, 2, 1. So the pattern occurred 3 bars ago. It could be just really taken off. So if you don't get many signals that are brand new, look at the ones that are in trade, because they could be really, really good. And you all know you can just double click these. It's so cool how this works, MetaStock, and you'll get right to the chart. So it's easy to prospect. Okay, so really that is sort of the end of my summary of the product and the patterns. And I hope some of what I've taught you is rung true, and that you can take that home and use it. I believe this was recorded, so you can go back and study. And of course, there's the book. So you get the book. It has all the same stuff in it. Fulgent.ai/MetaStock. No secrets in there. It's just all disclosed, all there. And I think it'll help you. So appreciate that. So Jeffrey, we got 5 minutes. Happy to take any questions anybody has.
You're doing great, Ed.
Thank you.
Let's see. We don't have a lot of questions that are topical. I'm going to give you a non-topical one and see how you want to respond. Are you ready?
I'm ready.
Okay. Anise on YouTube says the market made a V-shaped recovery, but there's no fib trigger to the upside. Do you want to talk about that?
No fib trigger. I wish I had a chart marked up on the recent intraday. What we saw was resistance levels being broken and consolidations following through, is what we saw to the upside. If you're talking about like when it turned up from the bottom, that was a mess down there. I mean, those bars were all over the place. If I go back to MetaStock, you can just kind of look at it. How do I get an index symbol, Jeffrey?
You could do like .spy, or actually just do SPY, and you'll get the ETF.
Oh, retry.
Hit cancel. That was my fault.
All
I always
right.
look at the ETFs anyway. I do SPY. It's like .spx maybe for the actual index.
Well,
Type again, SPY.
SPY. Maybe I hit return too quickly. No, sure it's not dot. Oh, I have it on name. I have it on name. Sorry.
Oh, that's
Sorry.
it. Okay. No problem. Glad we figured that out. I was looking at it going, I don't know what's wrong.
What the heck?
So there you go.
Yeah. So if we go down here and look at this, of course, like I said, you can run the chart pattern engine on the market. I mean, this was just a mess right here. But what we saw was a consolidation, and I could mark this chart up right here. But consolidation formed here, and we had gaps happening and all kinds of stuff. This was a resistance level that was broken very solidly. If you look in the intraday chart, you'll see a very nice range. Here's that rounded top formation in the index, which Fulgent, the chart pattern recognition model, isn't seeing that because it's so small, but it's there. So, but it, right in here, except for the volume climax, you see the volume really, really high, and it backs off. That's a very good indication the market has done going down. It's going up. But so I Fibonacci, not sure. I was looking for a 50% right here. We started going down. I thought, okay, market could be going down, but then it turned right around the next day and didn't do it. So, yeah.
I think personally, I'm looking for a test of about 295 on that chart.
295. Oh, exactly. You mean for a reversal?
Mm-hmm. From here, I think we're going to go down to 295 and test it.
I think that's very.
Yeah.
That's
now,
right.
it's not going to happen. We're going to shoot up tomorrow to like 350 because I said it on air. That's just the way it works. So recommendation, not a recommendation, right? Let's see. Scott says it's always great to have Ed Downs in here teaching us patterns, Scott. It's always great to have you in here. Henry says hello from UK. So
is that Scott G?
Scott, yeah, Scott, yeah, you know Scott.
I know Scott. Hey, Scott, good to see you, man. By the way, this update is going to be available pretty soon. You guys are having it today, so whenever they got through their process, I don't want to put any pressure on there, Jeffrey, but We've got, which has the strength rating and the multiple time frames and all that. And it's, of course, it's a free update. So that's coming to you.
All right. That's about the extent of the questions. James wants me to stop jinxing the short positions for tomorrow. Well, anyway, not too much volume today. Oh, geez. Mr. Ravi says, I like your software. Thank you, Mr. Ravi. We appreciate that. So
Very much.
We had some issues with people not getting the ebook during the thing.
Oh.
Is that something you need to look a little into? Is that expected behavior?
Well, there was a website problem when we first put it up. So what I can do is go in there and find everybody that's in there and just make sure push it out again and say, hey, in case you didn't get it, here's the chart pattern book. So I can do that.
Mr. Ravi says, give me one good discount and I'm taking it right now. Okay.
Awesome.
I guess it's my turn.
Your turn.
Well, Ed, great to have you on here. I appreciate it. You did a good job and I love
Really
talking patterns.
I have so much fun. This is awesome. Thank you.
I remember the conversation we had initially with Ed I was like, hey, chart patterns, people love chart patterns. Your engine is great and build us a good chart pattern. And you certainly delivered on that part of it. So thank you for that.
You're welcome.
All right.
Fun.
All right. Very good. I'm going to go ahead and kind of give you a good, Ali says a very useful presentation. Let's go ahead and get to the offer real quick. I'm going to go ahead and
Jeff?
show my screen here.
Thank you.
And we're still, Ed hasn't told me to stop doing the introductory price yet.
Jeff,
that might be coming soon. But just all the stuff that's actually included in this thing. I love it. I love how you've got all the scanning. You've got the drawings of the patterns so you can kind of see the idealized way that they look. I love the new changes. It's been very, very widely liked by the people that have tried it, and had certainly delivered on a really good program. What we're going to do for you, if you don't have a copy of that chart pattern engine MetaStock add-on, it's normally $1,500. We're going to do the introductory price of $995. We're going to back that with a 30-day money-back guarantee. We're going to let you try it for 30 days. If it's helpful for you, we know you're going to keep it, and most people are keeping it. So it's been working out really, really well. And it is a really, really cool product. I'd recommend you try it. If you don't have MetaStock, now's a good time. In case you don't know about MetaStock, MetaStock is rated #1 in its price category for 27 years in a row. And it's really kind of the engine that runs the chart pattern engine. It has like the scanning capabilities, the expert advisor, the commentary, the alert mechanisms. And there's a reason it's been rated #1 27 consecutive years. You should try it. If you go ahead and get
the still on?
You are still on.
I didn't mention there's alerts too. The alerts are there. So they can it's there. I didn't show it, but it's in the sorry.
Yeah, it's okay.
Yeah.
Yeah. We have had a lot of people ask for those alerts too, particularly
they're there.
But you've made at least one MetaStock user very,
Jeff,
very happy.
Gibby, can you hear me? Hello.
We can hear you.
Okay.
Yes.
Sorry, time to break in. The website you have up there is metastock.com/CP is not correct. It is metastock.com/Fulgent CPE, if I recall correctly. Also,
okay.
I went to Ed's page, and other than a really swell high school picture of Ed, I don't see, I'll show it to the crowd, I don't see anything that says order a book. I don't know. So I think that URL is messed up.
I don't know what you're talking.
All right. I'm just saying. Just put it out there for the group.
I don't know. Okay, thank you, Gregory. The book URL, I think, is what Gregory talked about. 2 URLs, both of them.
Yeah, I am talking about 2 URLs. The book one and the one you just had up. And the book one,
so
I can't make it work, Ed.
You mean the one I gave you?
Yeah, the Fulgent.ai/MetaStock. I don't mean to interrupt too much what you're saying. Just FYI, you might want to put something out later to the registrants.
Sure, be there. I get right to it. Fulgent.ai/MetaStock. I go right to it.
I clicked on your link, Greg, and got it. And it says
okay. Maybe it's just something going on with my Mac. It's probably a Mac thing. I apologize for interrupting.
It's there. That's okay. No problem.
All right. Okay. That sounds like a party. All right, so it's $14.95 here. Today we're going to do a $9.95 webinar special. 30-day money back guarantee. You can give us a call at 800-882-3040. You can order online at metastock.com/FulgentCPE. If you have questions, you feel free to visit us at metastock.com/saleschat.
And I also answer emails. I'll take emails. Edit Fulgent.ai, whatever.
Oh, at Fulgent.ai. So this week does work. I just fixed it. And the other one does work as well. So give us a call if you have any questions, 800-882-3040. Thank you, Ed, for your time today. Thanks for joining us, everybody.
Yeah.
We'll see everybody at the next one.
Absolutely. Thank you.